In this video, I want to walk you through an all-in-one indicator built for ICT and SMC price action concepts. Before we begin, if you're not familiar with ICT or SMC, here's a quick breakdown. ICT stands for Inner Circle Trader, a well-known trader named Michael Huddleston, who founded Inner Circle Trading and developed what many know today as smart money concepts. His trading approach relies entirely on price action, meaning no traditional indicators, no oscillators, nothing except pure market movement. This method focuses on following smart money, the capital flowing through the market from institutions and large financial players. SMC includes several advanced ideas. I also have a separate video explaining some of the foundational smart money concepts. All right, now, let me introduce an indicator that automatically marks many of these SMC levels for you. To add this tool to your chart, click on Indicators and search for Maxwell Price Action Suite. It's an editor's picks indicator created by Maxwell Capital Trading. Once you add it, the indicator overlays directly onto your chart. And as you can see, it plots multiple lines, zones, and labels. Let me break down each one. Right now, we're looking at the 4-hour time frame, and this is the most recent candle. The market is currently closed. The indicator displays the high and low of the active candle, and it also shows the daily high and daily low. These levels often serve as important support or resistance zones, which is why price action traders track them closely, especially when a new daily candle opens. Yesterday's high and low remain key reference points as the new session begins. Next, you'll see two shaded areas, one below the current price and one above it. These are the areas of interest, sometimes referred to as discount and premium zones. The green zone below represents the discount area, where buyers view the price as cheap, increasing the likelihood of bullish interest. The red zone above represents the premium area, where sellers view the price as expensive, increasing the chance of downward pressure. These work similarly to supply and demand zones, and they often provide strong setups, especially when the market forms a range. When price reaches the discount area, demand typically increases, pushing price upward. And when price reaches the premium area, supply increases, causing price to fall. Now let's look at the next element, the blue and red blocks you see on the chart. These represent order blocks. If you're unfamiliar, an order block is a price range where major players, institutional traders, banks, hedge funds, previously placed large buy or sell positions that resulted in a strong move in the market. Order blocks are usually identified by sharp reversals or strong directional candles. For example, a sudden price drop often signals a bearish order block, and a strong rally signals a bullish one. Identifying them manually takes practice, but this indicator automatically detects them for you, allowing you to use order blocks in your trading strategy without guesswork. Next, the indicator highlights two core SMC concepts: break of structure, BOS, and change of character, CHOCH. If you're familiar with smart money concepts, you know how important these labels are. When the market is trending upward and creates a new higher high, that high becomes potential resistance. If price breaks above it, that is a break of structure, marked as BOS. In a downtrend, when price forms a lower low and then pulls back, that low becomes potential support. If price breaks beneath it, that is also a break of structure. Change of character, or CHOCH, signals a possible market reversal. For example, if the market is in a downtrend and price suddenly breaks above the most recent lower high, that's CHOCH, and it suggests a shift into an uptrend. Likewise, if the market is trending upward and price breaks below the most recent higher low, that is CHOCH to the downside. This indicator shows both internal and external structure breaks. Labels with an I mark the internal, short-term structure. Labels without an I mark the external, long-term structure. For example, if the overall market is in a downtrend and price breaks a major lower high, that's a long-term CHOCH, signaling the beginning of a potential larger-scale uptrend. The indicator also plots lower highs, LH, and lower lows, LL, during downtrends, as well as higher highs, HH, and higher lows, HL, in uptrends. These labels help you quickly identify the current trend direction without manually analyzing swing points. Now let's move to the yellow zones. These represent fair value gaps, or FVGs. Fair value gaps show imbalances in the market, areas where price moved so quickly that no trades were executed between certain levels. On the chart, they appear as a three-candle formation where the middle candle is large, and the wicks of the outer candles do not overlap. These gaps often act as magnets for future price action. When price returns to a fair value gap, it often reacts like a supply or demand zone, signaling a possible reversal. Finally, the indicator also draws Fibonacci retracement levels. Using the starting and ending points of a move, it plots common Fibonacci ratios. Traders frequently watch the 50% and 61.8% levels, as pullbacks often end in this zone before the trend continues. For example, after a bullish move, the pullback might stop at 61.8%, before price pushes upward again to create a new higher high. All right, that covers everything. Thank you for watching this video. If you have any questions, feel free to comment below. I respond as soon as I can. And if you haven't subscribed yet, please do, and hit the bell so you don't miss future videos. See you in the next one, and good luck with your trading.